What's up, what's up, what's up? It's your boy Moo. We're back with another live trading video. We're looking at the S&P 500 futures, and I'm going to go over some of the live trades that I took on Friday, October 14th. So let's just get right into it. We had a strong downtrend followed by a break and a bit of congestion with prices going below the EMA, above the EMA, below, above, and once again, we had a new high here, double top. We pushed below the EMA. All the bulls got trapped with this very nice signal bar that traded up and went down and nearly closed on its low. We closed below the 21 EMA and we put our stop loss one tick above the signal bar. And at this point, because the range rules are in effect, we expect to at least test these lows and hopefully go even lower than that, which is why we have a runner as well as a scalp portion. So right now I'm trading 3 contracts as a scalp and 1 contract as a runner. And I actually wasn't really paying attention at the time, but we were trading right into a news item. But as we will see in a second, even during news items, price action works. Visually, there's also a 2-legged pullback coming from this low. We had 1 leg up, first pullback, another leg up, another pullback, and a lower high confirming this first entry short, second entry short. We're coming from these highs. Once again, we're expecting to get to the lows, and we ended up actually trading much lower than that once the news item broke, which I wish I ended up having a couple more runners in place, but I'll take what I got, and you can't always be sure of what's going to happen during such volatile news items, but as we see, news item hit, we immediately went down lower, and I had to move my buy limit lower and lower and lower before eventually just taking some profits once we had our first break to the upside. Like I said, you don't really know how far these are going to drop or if prices are just going to quickly reverse and take my stop loss out. But I did end up taking in about 16 points, I want to say, which is $800 per contract. I only had 1 contract, which kind of sucks looking back, but hey, it's great to start off the day with a very, very nice winner. And at this point, yeah, it's just always nice to have a clear mind and only take the highest probability trades. And contrary to what a lot of people think is that what is much higher probability compared to a breakout pullback pattern is actually a failed breakout, which is what we will end up seeing in just a second. So we had this range where we were trading from the highs to the lows, back to the highs, and everything seemed like we were going to go even higher. Like I said, we had a nice signal bar here. We had bounced several times. We broke out the top. We came back to test it, and previous resistances become supports, right? Previous supports become resistances. Well, what is actually more reliable and more accurate and happens much more of the time is that these breakouts will actually fail, especially because a lot of people were thinking the same thing that I was in terms of the nice bullish signal bar. We had a new low here. We had 1 leg up, first entry short, another leg up, second entry short, double bottom. We had already bounced several times. Okay, we should definitely go up. But as we already went over, we have to respect the downtrends, and this is why several people got trapped going long at this range. And just to reiterate one more time, a breakout pullback pattern is not what we want to look for at first. The first thing that we want to look for is a failed breakout, which means we should be looking to sell at these highs and not buy at all. Let's go on to the next trade. Okay, and for this next trade, we are going to see that I did kind of break some of the things that we just went over in the last trade, but for good reason. We went over the fact that most breakouts of trading ranges will fail, which means we should sell at the highs and look to buy at the lows. In this case, I ended up selling right near these lows, and that is because a failed breakout means we have to break out first. So we were at least expecting to test the lows of the day before the breakout even would occur. So here we see that a lot of people were buying near these lows, but not at the lows, or not once we reached the lows, which actually just added more selling pressure, because all the people who tried to go long following this nice bear signal bar are going to get trapped if this next bar breaks below that one, and we attempt to reach the lows, which we should always look to reach, especially because we had this downtrend working, we had a break, and we hadn't tested the lows. In price action, close is not close enough, and it does not mean that we reach the lows. If we're close to the lows, it does not mean we reach them. Until we reach them and we have more than just a single signal bar, in this case, this bullish signal bar, should we even be thinking about going long, which is why this scalp ended up working to the downside. And let's just go over why I sold as well. So we had a new high here. As I already mentioned, we are expecting to reach the lows of the day, just according to trading range rules, which happen every single day in the markets. And we had a new high here. We had a first leg down and a first entry long, another leg down, and a second entry long. But like I said, we shouldn't be looking to go long. So once we had this second entry long, that ended up trading up and going down and trading near its lows, closing near its lows, that created a failed second entry long, which is a great trade to look for if you're looking to go short. We did not end up getting a runner in this case, but we did end up pushing lower and once again trying to test these lows. Even though the failed breakouts are very high probability, you can't just look to buy as soon as you see one nice bullish signal bar. You have to follow all the trading range rules and trend line rules. So now we're getting to the point where you can look to fade the breakout because we had a break and a new low of this downtrend. So once we potentially trade up and above the EMA and we have a bullish signal bar that touches the EMA and closes near its highs, or a failed second entry short in that case, then can we start looking to go long. Let's go to the next trade now. Okay, and for the final trade that we're going to look at today is going to be an illustration of what I was just speaking about in regards to the failed breakouts and when to look to go long. So once again, we had a break of the short-term downtrend, a new low, and we want to look to buy at these lows once we push above the EMA and we have a higher low testing the EMA, bullish signal bar, nearly closing on its highs. I went long right there, and it worked for a quick, easy scalp. The reasons it worked is for all the examples we just went over and the trading range rules, which simply state we trade from the highs to the lows, and we expect to trade back up to the highs. But you have to be patient. You have to wait for the setups to occur. In this case, the setup occurred with this short-term uptrend happening, a break, a higher low, and that's that. I hope you guys enjoyed the video. I hope it wasn't too confusing. I hope I explained things decently well. Let me know in the comments what you guys thought. Have a good one. Peace out.